The Fed just broke the car market. What you need to know.
It's Brian Preston, the money guy.
Brian, I am so excited about this topic because buying a car has been a difficult thing. If you have been in the car market for the last 2 years, it has been trying and troubling and difficult and frustrating, but there might be some light at the end of the tunnel. There might be some things you ought to know if you're thinking about buying a car now or at some point in the future.
Well, just the entire car industry has been bananas for the last few years. So we wanted to do some content on what's actually been going on in the car market so you can know, hey, what's kind of the fluff or the craziness that's been created and what is the reality of what should be happening in the car market. And we're going to load you up today because it is such an interesting thing that this has been so important in the fact that we all know we live in an inflationary period right now. I think a lot of people would be surprised to find out that out of the 200 things that the government's looking at when they look at the consumer price index, because there's 200 components that go into that, 10% is driven by the auto industry.
And that's, categorically, that's a big percent. Well, across 200 categories, that is significant. And what I think is interesting is when you look at car prices or used car prices, it generally tends to be fairly flat. Like prices don't necessarily increase or decrease a ton over time. You might have little swings. But if we look at what's happened in the used car marketplace from 2015 through 2022, it's been sort of remarkable what happened post-COVID in that specific market.
This will be one, and this is what I love about what we do for a living and working in the financial field, being around and having an aptitude to like discussing money, is this is one for the history books because we'll look at charts like this in the future. You're not supposed to live in periods where the used car marketplace outperformed the S&P 500. That's right, outperformed the equity markets. Like I said, bananas. This should not be the way it is, but I think we're now headed towards some reversion to the mean. Sure. So let's kind of talk about some things you're going to start seeing and what to expect from this.
Well, and it makes sense that as the Fed has raised interest rates and the cost of buying cars has increased because the carry, it makes sense that it's settled down a little bit. Like if we look at where it was at the pandemic peaks, it's 45% year over year, the cost of used cars. It makes sense. Okay, now we are normalized, and perhaps maybe we'll even see some negative movement where used car prices actually decrease in the years coming forward, potentially.
Yeah, well, look at the wholesale price index. If you look at the wholesale used price index, you can see, now I asked Daniel, I said, hey, give me the update because this shows that prices are down 9.4% year over year. But guess what? I was just reading a research report last night that for the auto segment specifically, the car segment, for the last 4 weeks, that segment has lost 1.17% per week.
Per week.
So if you think about that, that's getting close to a 5% drop just in the last month. So this is an ever developing. If you come back 3 weeks from now and look at this stat, it's going to be completely different. We're experiencing the shedding of some of this value, or, trees don't grow to heaven is what we like to say, is that we had this huge run up in the price of used cars. I think we're starting to see, as I mentioned earlier, reversion to the mean.
Yeah, and a lot of people are saying, oh man, I just bought a car and I didn't necessarily feel this, and man, this is a little bit too late. Right now, I don't think we've necessarily seen dealers pass this on. I don't know that for the consumer, the savings have happened yet, but it's got to be coming because ultimately in the automobile marketplace, it's a supply and demand marketplace. So if consumers aren't willing to still pay those elevated prices, we're going to naturally have to see the prices start coming down and dealers passing that on to the consumer.
So before we start sharing how to navigate all this, I think it's important for us to kind of bring some normalcy back into this. So let's talk about why cars are not great for your personal finances.
Now, one of the things we always used to say, Brian, is that cars are depreciating assets, but we've kind of had to say that tongue in cheek for the last 2 years because that's not been what's been going on. They've actually been getting more valuable through time, which is not the norm.
Yeah, and there's been a lot of content. We probably did look like the old men on the front porch, talking about, hey, this is not the way you should build your finances because, believe me, between TikTok, YouTube, and Instagram, there's all these people that were saying they had viable businesses with becoming essentially their own used car dealerships. Right. But that stuff panicked me because I just knew at some point we would return to normalcy. And here's why I don't like vehicles, because in addition to them being historically depreciating assets, you have to pay to keep these things going. If you think about the big expenses with vehicles, we've got maintenance. And we all know that cars do require maintenance, especially the conventional cars, because you have to do the oil changes. Even if you have an electric car, I find that I don't rotate my cars enough. My tires enough. There's all kind of things like that. Fuel costs money, whether it's energy, whether it's gasoline. There's all kind of costs with that. The insurance, we have to pay to protect these things because it's kind of a big life event financially if you actually got in a car accident. And don't forget, most municipalities, I'm sure every place I've ever lived, every place I've lived requires me to register, and then they figure out whether even if they don't call it a tax, they charge an annual fee for the ability to and the privilege of using your vehicle in the area. So that's all just headaches that you have to deal with on a financial basis that I don't like cars. They're not great in that aspect.
Well, and then you take that and you compound the fact that most often when people buy cars, they're financed, right? So not only is a car already expensive where it stands today, when you finance it, it gets much more expensive. And depending on how you do that can really affect what you're paying. We did a quick case study just looking at two consumers. Let's talk about one that follows the money guy rule, the 23-8, and we'll talk about that in a moment. And then let's talk about the other, the average consumer. So let's say that they both buy a $28,534 used car. And we just pulled that because that's the average number from Experian in Q2 of 2022. Let's say that the money guy follower finances for 3 years at 8.6% because that's where auto loan rates are right now.
Insane.
It's insane. Or the average consumer finances for 6 years at 8.6%.
That's because that's what most people are doing these days.
That's right. That's exactly what we're going to talk about, even what the average is on that in a second. So when you look at it, the money guy follower for this $28,000 car ended up paying $32,400. The average consumer bought the exact same car, still bought it for $28,000, but they actually ended up paying $36,600. Financing over that additional 3 years made that car $4,100 more expensive, or 15% more expensive just based on the way that they financed the vehicle. So it is a costly endeavor when you go about buying an automobile.
Well, as this shows, because the two numbers that are highlighted in yellow, but like the 6 years is the typical financing now. This is why people are doing it wrong, is because if you apply that people are spreading out, they're not paying attention to what they actually owe on the vehicle. They're paying attention to their car payment.
That's right.
And that's the biggest, it's a sales ploy when you walk into a dealership and they say, how much do you want your payments to be? No, focus on what you're actually going to owe, because you will have to pay it back. But look at this stat right here. If you look at the average auto loan is 72 months, that's that 6 years we were talking about, and 1 in 3 people who trade in a vehicle are completely underwater. That means that they owe more than what the car is actually worth. You're doing vehicles wrong if that is you.
See, and one of the things that drives me absolutely nuts is as we've come through this time of low interest, which is not here anymore, but we had these low car payments, people would give us so much flack about the 20% in the 23.8. This is the reason we think that when you buy an asset, specifically a depreciating asset, you want to make sure that you have skin in the game to protect yourself from going underwater. Because once you do this one time, it is really hard to get out from that cycle of just rolling in negative equity, negative equity, negative equity. You are never going to actually own your life if you are carrying out that behavior over and over and over.
I talk about mindset a lot on the show because I feel like I want to make sure people understand the difference between use assets. These are things that give you transportation. It's your house, gives you shelter. Because these things, I don't want you to take a use asset and get this false sense of success on something that you won't actually be able to turn into money for yourself. And cars are definitely one of them. But I do know, because we've hit it hard, we've rang the bell that these things are obviously horrible for your finances. But I got to tell you, they are necessary. Right. I mean, they get you to your job because that's how you're actually going to build wealth, not by appreciating used cars. You're going to make money through your labor, and you're going to save through your discipline, and that's what's actually going to start building wealth. And I want to kind of pivot the conversation to say, okay, if we know these things are bad for your finances, but a necessity of building wealth, because you got to be able to get to your job to actually start building some wealth and actually turning this into money that works for you, your army of dollar bills. how do you actually buy a car the right way?
Yeah, there is a right way to do it. Now, this is something that there's not a consensus across the financial world and across financial minds that fall into this, but we're going to tell you our rules. These are the rules that we think if you will follow these, you can buy an automobile the right way. And the very first one is to follow what we call 23-8. And quite simply, we want you to put 20% down. We don't want you to finance it for any more than 3 years or 36 months. And when you add up all of your car payments, no matter how many cars that you have, all of your car payments in aggregate cannot exceed 8% of your monthly gross income. So 20% down, don't finance for any more than 3 years, cannot exceed 8%. But there's some little caveats we also throw in there.
Well, I think it's important because I saw recently now there's this, some other financial channels are pushing 24-10. And I was like, huh. You see
that
what they've done here?
Familiar.
That sounds very close to my 23-8. They did. I don't know if they're just rounding up, but I feel like it's important. The 20% down, that's making sure that you actually have some equity in the vehicle. The 3 years versus 4 years, because now that I'm seeing more people are pushing this 24-10, I like 3 years because we're going to talk about depreciation a little bit more here in a second. But these things do drop, and I never want you to get in that underwater position. And I think it also will keep your wallet and purse in check from what your eyes and your ego want you to do. So 3 years is definitely going to squeeze you and keep you from buying too nice of a car, because the longer you spread it out, gets you closer to focusing on the payments versus what you actually owe. So that 3 years is going to protect you from that on the mental trap that you can fall into. And then the 8%. A lot of people have said, where did you guys come up with 8% of your gross income? If you think about the fact that when you look at general finances, we're trying to make sure that you have an abundant life where you not only get to save and invest for the future, but you actually get to live at the end of the day. And unfortunately, a part of the messy middle and building wealth is you probably do owe money, whether it's your mortgage, whether it's student loans, whether it's cars. So if you take all that into account, you've got to keep your total debt payments below somewhere in that 35 to 40% range. Well, your housing's going to be 25% of a lot of that when you do a mortgage. We wanted to make sure that you actually had enough life. That's where the 8% came from. And then that leads to some of these other rules, Bo, that you were talking about. I don't want you buying a luxury car with, trying to look at this and figuring out, okay, I want to get a fancier car, but the longer I finance it, the more I can afford it. No, you're faking success at that point. This is supposed to be transportation to get you to your job, and then when you want to buy a nicer car, the luxury brands, and I always hesitate. I'll pick on the ones that everybody kind of agrees on. That's your BMWs, the Mercedes, the Jaguar. But I'm not going to. Tesla's in that gray zone, but I still put Tesla in that category because it's expensive. But I want you to treat that as you better pay it off within the first 12 months, same as cash, because that way it will keep you honest. And then that leads to the last rule, Bo, that is most important on building an army of dollar bills. And what is that one?
That is that if your monthly investments do not exceed your car payment, you're doing it wrong. If you're only saving $100 a month into your portfolio, but you have a $500 car payment, you are out of whack. You have to make sure that the dollars you are sending into your portfolio for your future self are greater than the dollars you are using to purchase an asset that's going to get less and less and less valuable over time. If you have that out of whack, this is the cold water, this is the painful thing. You might need to come up with some sort of corrective action. Either figure out, how do I save more, or maybe the car that I'm in right now is not the car that I should be in.
Well, I look at we take fire from all angles. We're in the Millennium Falcon, and then we got the fighters coming at us, and we're pivoting around because we just covered the side where people say, well, why don't I just keep the car finance longer, and that way I can let my money work, because maybe you did finance a car when interest rates were much lower.
Sure.
So we just gave you why we don't want you to extend that too long, because we don't want you to be underwater while you're driving the car. But then there's another camp on this side that's like, guys, you should never finance a car. You
all
should
cash,
pay cash.
that's it.
Pay cash. If you can't afford it, go buy a jalopy. Go buy something.
A lot of the advice
And look,
out there.
and as a kid, I mean, back when newspapers were actually a legitimate thing, there used to be an entire section of the newspaper that would be cars for under $1,000.
Really?
Oh yeah. See, I'm older than you. So it's no, there used to be, anybody who's of my age will remember, because it used to be a fun thing, especially when you were about 13, 14 years old and you started daydreaming about the days you turn 16 drive. You're like, oh, let me go look and see what's under $1,000. Because realize inflation a car now costs $30,000, $40,000. Back then, a car might have only been $15,000 to $20,000. So you could still go buy something. But the problem I have with that $1,000, $2,000 car that you can go pay cash for is that nobody ever talks about the fact that you've got to be able to get to work.
Absolutely.
I mean, because do you know, you can get away with it once if you call your employer and say, you know what, my car broke down on the way to work. But on the second and third time, they start going, what's wrong with this person?
This isn't right.
This
is
isn't
a dog
what's
ate my
supposed
homework kind of thing.
And then the other thing I think about is just the reliability of the fact that you get that call from a relative or somebody who wants you to come pick them up at the airport at 9:30 at night. And then you're like, man, I'm a little nervous because I don't know if my car will make it. Or if you had to go do a road trip 3 hours away because there's an emergency and you're trying to help somebody out. If you don't trust your car, psychologically, that does something.
Sure.
Not only is it paying for you to get a job, getting you to and from your important resource of the job, but it's also just the reliability of all the other things that come at you with life. So we've tried to create a system, because I'm not a handy person. I grew up in a household where my father and my brother both had some certifications, were the mechanics in the neighborhood. They could fix anything. They could MacGyver it, paper clip. They could make anything work. Me, I could tell you from hanging out with them the names of the parts just from being around them in their conversations.
The paper clips, right?
But I didn't know how to fix anything. And it just wasn't. I have learned that we've had to create a path, a bridge to let people actually be able to have reliable transportation. And that's where we came up with 23A.
Now, don't mishear us. Do we think it's great to pay cash for a car? Absolutely. Do we think it's a good thing if you're someone in a position where you can just write a check and you don't finance? Absolutely. The reason we came up with 23A is exactly what you said. It's to give some guardrails so that you can get into a car that you need to be in, even if you're not at that stage of life right now where every car is paid in cash. We take a lot of flack. People are making it sound like we're telling people you got to go out and borrow money.
No.
Absolutely not. But if you need to, that's okay. Make sure you do it the right way.
Yeah, I mean, I try to base, because we both come from pretty humble beginnings. I like to give you real rules that actually are actionable that you can use, not hypocritical rules that maybe I've seen, I tell you on paper, but then I go around and ask every one of our financial advisors and find out nobody here did it that way. Because I feel like that's something that I always want to make sure that I tell you, we eat our own cooking here. So I don't ever share anything that I don't believe in. So if I tell you I've always paid cash from around vehicles, that'd be a fib. Because my first true car that I bought for myself, it was $10,000. I put down $1,000 on it, and then I financed the rest over, 3 or 4 years. And if that worked for me, because I needed reliable transportation, I want to share that. I want to give you those guardrails, just like you talked about. So that leads to the next big decision you have with vehicles. Should you buy used versus new?
Now, again, Brian, we grew up in Atlanta. There's, Clark Howard was a big radio personality there. We love growing up listening to him. And the conventional wisdom has always been, hey, don't ever buy a new car. Don't ever buy a new car. Don't ever buy a new car. Only buy used, only buy used, only buy used. But as we started studying this and we started looking at this and we started kind of like analyzing, is that true that you should only and always ever buy a used car? We arrived at a different conclusion. I don't know that it's always the absolute best scenario. There are other factors that come into play as to whether you should buy new or should buy used.
Well, I mean, it would be crazy to not mention what just recently happened. In the last year, during the pandemic, all the semiconductor chips, we had all kinds of supply chain issues.
Absolutely.
And so it's not uncommon to have a picture like this that we've got up here if you're watching on YouTube. It's just the parking lot's full of F-150 trucks.
You see any Raptors in there? You see anything?
They are everywhere. So as far as the eye can see, these are brand new vehicles that just didn't have the components so they could actually sell them to the public. Well, this was not just F-150 trucks. This happened across the industry. And you saw crazy distortions where actually used car prices, I've already shared this stat once, where the S&P 500 actually underperformed used car prices because what happened when people couldn't get new cars, it changed the market to where everybody went used. But now that we've got some corrective things going back to some, bringing us a reversion to the mean, bringing back normalcy, I do think it's important to understand where do you fall in this process? And I think there's a progression. You have to kind of walk yourself, just like we have the financial order of operations that tells you what to do with your next dollar. You have to think about cars in this way, because I don't mind sharing that used cars was where I first started because new cars have gotten so expensive, and I wanted to take advantage of depreciation. But what happens when we talk about depreciation?
Yeah, it's the thing that we've all heard, if we've spoken with anyone with a little more wisdom, that when you buy a new car, as soon as you drive it off the lot, it is less valuable than it was before you signed the paperwork. And we can see this. This data from Edmunds shows the depreciation of new cars over time, that really the best time to buy a vehicle, all else equal, is somewhere between years 3 and 6, because the value of the car decreases so much in those early years. You literally drive it off the lot and it is no longer worth that value. So the wisdom is, I'm gonna go out and buy a used car. I'm gonna let someone else pay for that depreciation, overpay for that thing, and after it's come down in value to where it's somewhere between 30 to 60% of its new value, that's when I'm gonna swoop in. That's when I'm gonna buy the recently used low mileage vehicle.
So this leads to, because I love, because once again, it goes through our chain of thought of how did we develop the systems we have. So I love, because you see that I can get a car for 40 to 70% at a discount. You're like, man, that is where I'm at. I'm all about that financial mutant life where I'm trying to get as big of a discount as possible. But you will start to notice when you start looking at cars, not all car brands are the same. Is that when we started doing research, and this is something, because I don't mind sharing my used cars that my family was doing. You had the Hondas, the Toyotas, and you start noticing a trend. You're like, wait a minute. These cars, I just showed you a slide where Edmunds said that the typical used car should lose 40% in the first 3 years. But then that's not the case with all brands. If you look at the top 3 on holding their values historically, Subaru, Toyota, and Honda, those all are sitting right around 70% of their value. It's only when you get to other brands that you see those huge drop-offs that we were talking about. Because look at the luxury brands. If you look at Mercedes, Land Rover, and Jaguar, it's they lose like 50%.
I'm sorry, what was that last one you said?
I love saying that because I've listened to so many commercials. It's like the only thing I can say it that way, because my southern accent doesn't allow me to get that coolness on any other word, but I got it on that. But it is one of those things. Pay attention to your brands, because what this is going to do for you when you recognize that you want to buy some of those manufacturers, because maybe you're a car buyer that likes to drive cars for 10 years, because that is one of the things, a financial mutant skill set I want you to understand. People, if you have neighbors that are flipping cars every 18 months, that's not good for your finances. That's actually horrible. Secrets of being a mutant. I judge people pretty hard. I don't like it, because judgment is not a good thing. It's not a good skill set. It's not a good thing.
We draw some conclusions.
But when I see people when I see people flipping cars every 18 months, if they don't work in the car game, that gives me pause, because that makes me wonder, are they good with money? Because a good use of car buying is actually, if you're going to buy new cars, I want you to own them for like 10 years.
Absolutely.
I mean, at least 10 years, because if you can do that, man, you can absorb a lot of things. And it also allows you now to change your mindset from, well, if there's brands that hold 70% of their value after 3 years, that's probably the type of brand or vehicle that instead of buying it used, I'm a good negotiator. I'm good at being a financial mutant. Why don't I go buy that car new, so I know its history, I know what's been done to it, and then I'm going to baby the heck out of this thing for 10 years. This will lead us to, maybe you should be more on that new car side of life.
Now, it's interesting, Brian, because one of the things we were talking about in pre-show prep is like, when you're making this decision, you got to decide what stage of life you're in, right? You got to figure out sort of where you are, because the way you look at buying cars and making car purchase is different than it was 20 years ago, right? Like, you're not in the same position, so you approach it a little bit differently when you think about the reasons why you buy new versus the reasons back then why you bought used. Is that a fair assessment?
Yeah, and I don't mind sharing that I didn't buy my first new car until I was 32 years old. So it was not something that I can't graduated college and then I went out and bought a brand new car because look at me, I'm a college graduate, I got a job. No, I was like, no, you're going to go buy a reliable transportation. It wasn't until I started having some financial successes, I had my ducks in a line, where I felt like I was paying myself first, I was investing, doing what I was supposed to. So me and my spouse got our first new car at age 32, and I'm glad that we didn't do it out of order. We didn't do it in too big of an order because, it does. You need to be very careful that because there's so many distractions, and I've talked about this a lot. I want you to be a builder of wealth, but we live in a consumer of wealth society. So cars are one of those biggest things because you can live in a beautiful house, but your coworkers don't see your house. The people at the stoplight don't see your house. They see your car, and the advertisers take advantage of that status. I mean, and I remember the first time I went out to California, like the LA area, I was like, what? Because I feel like that, and maybe it's changed, but when I was out in California in the LA scene last, I was like, can these people really afford all these cars? Because they had Range Rovers, like we have Honda Accords back in Georgia. And of course, I moved here to Nashville, and it's a lot of nice cars here. We're not too far from it. So just be careful because you can get ahead of yourself on buying new when maybe you're not in the stage of life that you should be.
But one of the things that I have found is, I've bought used cars before, and I bought a used car one time, and it was not an expensive car. Within like a few months, I had to put tons of money into it, and it just wasn't the best. What I love about buying new cars is if I'm the first owner, I know what that car's history is. I know what the maintenance is. I've probably got a really good warranty on that. Now, it doesn't inoculate you from not getting a bad car. I mean, we bought a new car in the past couple of years, and it broke down twice in the first 10 months, and we ended up having to get out of that car. But I knew that with my family, growing family, I wanted some of those safety features. I wanted some of the protections. I wanted some of the stuff on the road. So at our stage in life, new car made sense because of those things. But you have to answer that question for yourself. Do I really need to? Are there reasons why I'm buying a new car? Or might a used car satisfy the things that I need for an automobile to satisfy for me?
Well, and I want to put this in context of the financial order of operations. Remember, if you go to moneyguy.com/resources, you can download the free deliverable. If you want the actual deep dive, it's learn.moneyguy. We have the course in the financial order of operations. I think new car purchases really fall into around step 8.
I think so too.
Because it is one of those things where you've kind of laid the groundwork. You've already really comfortably got that 20 to 25% of automatic investment, automatic wealth building going on that now you've got a little extra, and you're trying to figure out, is this the kid's college or is this, mommy and daddy get a nicer car? You're trying to figure these type of things out. I would make sure you get your priorities right, so that this isn't a decision that you look back on with regret.
So then once you've done that, you've decided, okay, new versus used, and you kind of have an idea of the brand, and you've reached that. Let's talk a little about the car buying process, Brian. How do we do that? How do we go about figuring out, how do I buy a car? What are the things I need to know? What are the ways that I can do it like a financial mutant?
By the way, this is, we can talk in both used and new, because this next thing we'll say applies to both, is that once again, technology and innovation makes this one of the best times to be alive. Not only to be an investor, because I've told y'all countless times how great it is to be an investor, where the barrier to entry to low cost, good research, as well as good things that you can go buy like index funds. It's the same thing with car buying. And the fact now you can go find out whatever data you want doing internet research. There's also now services that have decided they're going to go with the quantity job, where they're going to not try to make a ton off of a small quantity of cars. They're going to make a reasonable amount on a lot of cars. So that allows you to harness the power of research in the internet. And that's why Carvana, Tesla doesn't do any type of haggling. TrueCar, CarMax, these are all services and innovations that are changing the way the car buying process occurs.
Now, I think it's so interesting, Brian. I don't want to go off too far on a tangent, but I think it's important to drop in there. I've recently bought a couple cars in the past couple of years. And it's the thing where even though I do all my research and even though I have all this planning that I've done and I go to the dealership, I'm still there for hours, even though I've done everything. when you first bought your Tesla, and now I've sold cars to CarMax, but I've never used CarMax or Carvana. But I want to, when you came and you bought your first Tesla, it was unbelievable. I did everything online, and I showed up, and my car was waiting, and it was like an hour, or maybe even less than an hour. Basically, the car buying process was him showing you which buttons, right? Like it was just different.
It was the first Tesla I bought was 45 minutes how to use it, 15 minutes to buy it.
That is different than every car buying experience I've ever had in my whole entire life.
I'm sure that at the service center, because I'm such a skeptic, I was kept waiting. I had already done, slapped myself in the face in the car a few times, thrown cold water on my face, so that when they offered me, the wheel protection or the extended warranty, I was going to be ready to say no to them. And then I got in there and it was like nothing. It was signing the paperwork and then it was, let me show you how. So, the industry is changing, definitely. I think if you own dealerships, you're probably a little scared because technology is innovating and changing that world. But you said something there, Bo, and I wanted to kind of pivot and talk about if you do make the decision you're going to buy new. I want to kind of quickly outline what does that process look like? Because I do have, and I've done whole shows on this. If you want to go look in our archives, we go much deeper. But still, this is the basics that anybody who should know how to buy a new car, you need to know these kind of basic rules. And the first one is, you never show up at a dealership except for two purposes. You can show up at a dealership to test drive a vehicle. You can show up at a dealership to pay for a vehicle. You don't show up at a vehicle to test drive and buy a vehicle. Those are two separate events there. You make sure you separate those things because I don't want you to get caught in the emotional trap, because car buying is an emotional trap and they try to take advantage of you in this consumer society. So you only go to a dealership twice. As like I said, test drive and to pay for it.
Now, this is a hard one because my wife, she's a different kind of consumer. She's a different kind of consumer than I am. So this took some coaching. Like I have to tell her, like, hey, we're going. The person's gonna be super nice, and they're gonna say wonderful things, and I bet there's gonna be some special if we act today.
Yeah.
However, I just want you to figure out, what do you like about this car? What do you not like? What are the things that you'd like to see different? And you and I are gonna take that information, and we're going to leave, and we're gonna have that conversation. We're not gonna do that in the car at the place and plan on signing, because it removes the emotion from the decision. And anytime you make a big financial decision, if you can take the emotionality out of it, you set yourself up with a higher likelihood of making a good financial decision.
Well, you think about it. While you're at the dealership, they have the one car you want, and you're in the one dealership. What leverage do you have? You don't. So you have to leave, because as soon as you leave, now you can go online. You can research what you should pay for this vehicle. You also, what I love is you can then go find out how many other dealerships have that exact vehicle that you want. So now you've changed this from a very emotional, that dealer has that one car I want on there, to now there are 4 of these exact cars at all these different dealers. This creates now more of a shopping opportunity where now you reach out, because now you've taken the emotional side to where now it's a transaction side of things, because you don't have one option, you've got 4 options. Right. You can directly write and all dealerships pretty much have modernized where they have an online division now. You can start sending emails to each of the dealerships that have your vehicle. And by the way, if you're buying new, most places, if you type in your zip code, will tell you what their inventory at that specific lot. Now be careful, because if you expand the search too long, dealers will even grab some of the dealership cars, the inventory from other places. You want to deal specifically what's the inventory on the lot at that dealership. Try to find 3 or 4 of them and then start pitting them against each other through online discussions.
Now this is a little advanced tactic, but if you can expand your purchase geography, so you're talking about finding dealerships like in your neck of the woods around town, maybe they don't have that specific automobile that you're looking at, so you don't have a lot of leverage, but it's not uncommon to look within a driving distance. So like where we live in Middle Tennessee in the Nashville suburbs, and a lot of people buy nice cars here, so the price of cars is a little more expensive. When my wife and I went to buy our last car, we actually looked in Alabama. We looked at another state over in a more rural area. We were able to find the car located on a lot, and we actually got a good deal off MSRP simply because we were willing to go outside of our geographic region to do our research.
You are being so nice, because let me put this in a better way. People where we live are rich and stupid. I mean, I feel a little bit, because y'all, I mean, we've gotten all kind of compliments because we don't ever call anybody dumb or stupid on the show. But living here in Williamson County, I think there's a lot of rich, stupid people. And because I'm not picking on my audience, but I do think, because you go to any dealership here, and there's a reason I think about this, and the fact that February of 2022, 80% of brand new cars sold at or above MSRP.
That makes my skin like crawl just a
Who
little
is that?
bit.
It's all these people around here that just show up. They need a car. They buy a car. They don't pay attention. If you will, Bo, I want to give him credit. Because he said he bought a car in Alabama. You know what's so much more fun to say? Boaz, Alabama. He went to Boaz, Alabama. I don't even know where Boaz, Alabama is, but you bought a vehicle from there, just like I've bought vehicles from Huntsville, Alabama, because it makes so much more sense if you will expand your geography, and then you don't get taken advantage of. Because I just think there's so many, if you look at the population of where we live, there's so many people trying to easily part with their money that I guess they walk in these dealerships and get ripped off. And I'm just not willing to partake in that. And I want you to share one more experience share, because the problem with Boaz, Alabama is it's a number of hours away from us, and your time is obviously worth something. I have found, and I've heard other people do it, even if you buy from another place, did you have to go drive the hours and wait to drive back the hours?
Nope, that's exactly what I was going to say. It was wild because the guy said, okay, well, hey, we'll have this car ready. When can you come pick it up? And I was like, oh, man, I've got these young kids, and doing a 4-hour or 3-hour trip there and a 3-hour, that just sounds like a lot. Do you have any other solutions? And he was like, oh, yeah. Well, you just want to, we can have someone drive it to you. I was like, I'm thinking, oh, my goodness, it's going to be crazy. $150, and they delivered it to a guy. Literally drove the car to my driveway, had his buddy follow him. We did the paperwork right there in my home office, and he left. It was the best $150 that I have ever spent, and I saved thousands of dollars because I bought that car in Boaz, Alabama, instead of buying it right here in Nashville. So if you're willing to do a little bit extra, and ask the question, because the second best answer you can get is no. If they say, no, we can't deliver it, okay, I guess I'll figure something out. But at least ask the question. You may be amazed.
Okay, and then we'll close it with this last thing, because this is, I want you to understand, a financial transaction on a car purchase, even though you might be thinking about it as one transaction, there's actually usually 3 big components on here. There's actually the purchase price that you're paying for the vehicle, there's the trade-in of your existing vehicle, and then there's the financing. Don't look at it as one transaction. You have to look at it as 3 separate transactions. Believe me, the dealerships are treating it like it's 3 separate transactions. So always try to negotiate the purchase price first. Do it completely, all independent. Then you can negotiate the trade-in. And then last, you can talk about the financing. And it's probably smart before you go to go buy a vehicle, if you are financing, why don't you go on sites like Ally.com or your local credit union to at least know what the rates are, so that you can know, is there some special incentive and is it worthwhile to consider? But keep them all separated. Don't let them because there's always a little bit of that bait and switch it's not bait and switch, but it's just confusion that they will blend all these things together, because once again, they'll bring it back to focusing on monthly payments versus purchase price and all these other upgrades that they can offer. Keep it all separated, and you will protect yourself financially.
For most folks, cars are probably going to be the second most expensive thing that you ever buy, and you're probably going to do it a number of times over your life. So if you can follow these tried and true rules on making these big decisions, they can have a huge impact on your financial life. We say all the time, the problem with people building wealth is not often the lattes, it's not the small decisions, it's the big decisions. So when you make a big decision, make sure you put the time in and you make it right. If you've been waiting to get a new car, if you've been waiting to replace your vehicle, we think there could potentially be some opportunities coming down the pipe that you ought to be looking out for.
Well, there's so much data that we didn't even get to share on this show, because we have to try to get you, respect your time. But I did find, when Daniel and I were looking at some of the stats, is that the new car payment, the average car payment, is quickly approaching $700 a month.
That's wild.
As Bo said, I mean, you could, if you changed your mindset that you were investing $700 a month instead of paying for a car at $700 a month, or even if you got your car payment down to $300 a month and you could invest the spread, that $400 difference, you will change your life. I'm talking about these are 7-figure decisions. It's not just the 7 figures. It's maybe you're retiring 8 years earlier. So every time you think about a use asset like a vehicle, which I know we all go to the emotional stuff of, man, I'm going to look so cool at the stoplight, or even if you want to play the Chevy Chase vacation where, when that person pulls up next to you on the interstate, you're going to be like, I am the coolest person in this brand new minivan or whatever you're buying. I want you to pull yourself back into reality and think about, wait a minute, is this vehicle worth taking that $1 million away from my retirement? Mm-hmm. Is this vehicle worth me working an additional 6 years of this job? I think it will help center you back into where your priorities truly lie so you can make good financial decisions. I'm your host, Brian Preston. Mr. Bo Hansen, Money Guy Team, out.